Welcome back. We're chatting to Mike Peo, who's Head of Infrastructure, Energy and Telecommunications at Nedbank Capital. Before we come back to where we were before the break, which is talking about costs and that, what is Nedbank Capital's interest here? How are you guys involved in this renewable energy area?
So the government set out, the Department of Energy, acting together with the Ministry of Finance, decided to go and procure this approximately 10% of the generation capacity of power through a privatised process, inviting the public sector to come in and bid for projects to actually develop this 120 billion rand pool of our investment opportunity.
Okay.
So really what happens is international developers, local developers arrive, secure a site, prove up that there is a project capable of being banked under which they could bid for this power. And typically these projects are being banked with about 70 to 80% of the total project value coming from bank debt. So all of the banks in South Africa, the 5 major banks plus the 2 development finance institutions, DBSA and Industrial Development Corporation, have been very actively involved as the financiers of these projects.
Okay.
So we've committed a pretty substantial amount of balance sheet to help to fund the projects. 20 to 30% of the project will come from equity, which is raised by a combination of black economic empowerment entities and vehicles, as well as international developers, equipment suppliers, contractors who typically build these projects and then own and operate them for the period of the power purchase agreement which they have with Eskom.
Okay, if you may not be able to answer this question purely from a corporate point of view, but I mean, what sort of returns are you looking at getting out of this renewable energy?
Okay, Jeremy, so these deals are fundamentally underwritten by a government guarantee which says that if Eskom were to fail for any reason to make payment under the power purchase agreements, national government would stand behind the debt. So these deals are pricing just marginally above government debt for the pretty long tenors. The projects run for 20 years, they have 20-year power purchase agreements, and they finance for up to 18 years. So the margins, the returns are just marginally north of the government bond rates for equivalent, an Eskom bond for an 18-year window, for argument's sake.
Okay.
So these deals tend to be pricing at somewhere between 200 and 400 basis points over the equivalent government.
Okay, so this is one of those long-term investments where you would find, just trying to think from a South African point of view, you probably find pension funds and those sort of people starting to get involved.
Taking up that sort of paper.
To get a lengthy investment.
So these are regarded as very highly secured debt lends, so they do not attract major premiums for risk. A number of the banks have been involved in taking up positions as developers of these projects, and they would earn an economic return commensurate with the amount of risk that they perceive in bidding a deal, winning the deal, and then operating it for 18 years. But Nedbank has not been involved in taking any of the equity development positions at this point in time.
Are there any developments that are being looked at outside the borders of South Africa that would feed into the South African grid, or is that not part of it?
So part of this integrated resource plan assumes something like 2 to 5% of our power supply will come from imports. So currently we import from Cahora Bassa, for example.
Right.
There was a historic transaction that was done. It was, I think, an extremely favorable deal that was done probably 20 years ago, which is still continuing. But increasingly, the South African government has signed up, for example, to the Grand Inga, to Inga 3, which is a big hydroelectric project in the Democratic Republic of the Congo, which would theoretically feed down into the South African power pool. So we would import a certain component of power, which we have done historically.
But we're not outsourcing too much to become reliant on outsourced power in South Africa.
Absolutely not.
Yeah.
I mean, it will be probably somewhere between 2 and 5% of the mix.
Okay, let's get back to the cost thing here, and what's involved, because I would imagine that Yuri, who's sitting on his farm just outside Wolmaranstad, can sit back and think, young, we get a lot of wind here. Yep. Let me put a wind thing up and I'll sell power to the government. It doesn't work that way. I mean, how much money are we looking at as a potential investor? What sort of Tom are you looking at putting into something?
So on the wind side, the projects probably start at an economic level where you can generate sufficient power to bid in a competitive tariff, because there's a scale effect as well. So government, the two primary objectives from government side were to get the tariff down as low as possible, and then to include as much local participation in both the manufacture, development, and the procurement of the plant of the actual site, as well as local community participation in the project. So that wasn't an equal basis, but those were the two fundamental evaluation criteria for awarding bids. So to get to your tariff point, you needed to have a certain scale. So the wind projects probably range from 1.5 billion through to 3 billion rand. The problem is that Uamuri would have had to sit there 2 years ago and say, I've got a nice piece of land and I need to build a couple of masts. I need to get 80-meter hub heights. That is almost, if you can think of 2 towers the size of the Michelangelo Tower sitting on Uamuri's farm, so that he could run wind samples for 2 years, so that the banks could come along and say, okay, we think that there is a sufficient wind resource here for it to be viable. Then he would probably, if there was if the total project value, let's say he was going to develop a 75 megawatt wind farm, the development cost would probably sit around 20 million rand. So mostly Uamuri would have brought in partners who would have, international developers who do this for a living. They would lease his property from him. So there are a lot of Uamuris that have made an incredible economic return on either selling their farms or leasing rights over pieces of the farm to this developer. The developer would then sink the costs on completing a bankable feasibility, doing a very comprehensive due diligence to be able to prove to both government and the banks that the project would work, that it was viable, and then to be able to secure the money. And then the developers would probably on a 3 billion rand project put in 600 million rands worth of equity, their own cash, and probably raise 2.4 billion rand from financial institutions for the bulk of the funding.
How do I then, as a man on the street, and listening to my wife who said, we need to buy something to do with water purification, how do I get involved? Is there a way I can get involved in the renewable energy sector?
Right.
And I can also make some money out of it?
Jeremy, so there are very few listed equity funds that invest purely in renewable energy in South Africa, which means it's much harder to try and track that you can directly invest. But there are green indexes. Nedbank has a green index, for example, which targets companies which have met certain sustainability criteria.
Okay.
Increasingly, the next phase, so all of these projects are in construction at the moment. There's something like 49 projects under 2 phases that are in construction. The third phase is due to be adjudicated in October this year. But the secondary round, once these projects are constructed, they are going to start finding their ways into investment portfolios held by the institutional asset managers to create exactly that sort of opportunity. So a very simple way that people can get involved is Nedbank, for example, we have a green bond. All of the money from our green bond is plowed back into enabling my team to invest in these renewable energy projects. It pays a very good return, but there is no risk associated in the investment with the projects going bad. We've created a portfolio effect, which means you take your money, put it into a retail bond, which is backed by Nedbank, by the Nedbank Group, but the money flows directly through to this type of green investment. These pay very attractive returns in the retail bond space.
What sort of return are you looking at?
Around 6 to 6.5%.
Okay. But as you say, that is a very secure
investment. It's an investment return. It's a scalable investment over multiple sort of tenors, and it has components, for example, for the elderly as well. So it gives there's an increase as well. So that gives you a direct look into these investments, but without the risk associated of a single project failing. So currently to date, there are 49 projects in construction. We expect there to be another 20 by the end of this month. And but it's very difficult to invest directly into the projects. So increasingly, these portfolios and pools of assets will be created to create a platform for investors.
But I mean, surely that makes a lot more sense, because you're then spreading your risk across
technologies,
a whole load of different,
or a range of projects.
Yeah,
absolutely.
As opposed to just investing in one,
right,
which may go pear-shaped for a whole load of reasons. Right. The bonds, I mean, how long are these bonds issued for?
The retail bonds exist in the 1, 2, and 3 years, or so up to a 5-year tenor. So.
Okay, right. And as you say, and you're talking purely from a Nedbank point of view, people can invest through that.
That's right.
The green bond.
That's right. It's the Nedbank green bond.
Right. Over time, where would you, because we're fast running out of time here as well, where would you like to see the mix of renewable energy and, for want of a better word, the old energy? Would 50-50 be, would you be happy with 50-50?
Absolutely. I think for a country like South Africa, where we are sitting, a lot of the countries north of our borders, again, are much less developed and therefore probably will take longer to get a decent chunk of renewables into their mix. South Africa at a 50-50 mix is I think it's a good standard by international standards. Your northern European countries obviously have the luxury of very, very sophisticated developed societies where the energy mix might sit as high as 80 or 90%. But I think for a country like South Africa, 50-50 mix would be absolutely superb.
And that 50-50 mix, when would you in your renewable energy space like to see that being achieved by?
Okay. I think because of the time that it takes to construct these power plants, it's 2030. It's not in 2012 or 2015 or 2016. But increasingly the balance is shifting. The new coal-fired plants are far greener than they ever used to be. The technology is much greener, so the emissions are far less. So we will never see old coal-fired power stations being manufactured in South Africa again, just because no funding will arise for that.
The good news is we are moving forward.
Absolutely.
Mike, it's been great talking to you. Thank you very much, and thank you for spending time with us.
Thank you very much.